Oh yeah, there we go. Cool. Okay, we are streaming again. Awesome. It is June 11th, Thursday, about 5:40 p.m. Last night I got started on this, and once I got it to a point that I thought it was pretty good, I did version control. So when you're working on a spreadsheet, this is recommended. Once you're getting pretty far along, what you do is you just right click, move or copy, and you say copy. And you make a copy of whatever sheet you're working on. And so now you got a backup. Now you got the one you were working on, and now you got the new one. Like that. So I didn't need that. I was just doing that to show you. But here was what I was working on originally. And then now I've got the columns all cleaned up, and I'm working on the formatting and everything. Then I printed it, so I have a reference sheet. And now my next step is to simplify. I've got all the numbers here, all the main numbers for the profit and loss and the balance sheet. I have not included the cash flow analysis. I may do some cash flow analysis later, but for right now I'm focused on the P&L and the balance sheet. Well, these numbers should be able to tell me the story of this company, but there's still too many numbers. It still just looks like an overwhelming amount of data. It looks like the matrix. So I'm going to move or copy. I'm going to copy this, move it to the end. But this one is going to be like simplified. Call it simpler. Let me point out what I've done when I was going through and making this. Do you know about F2, the F2 key? If you're on a Mac, it's Control U to edit a cell. Well, I don't know on LibreOffice, but on Excel, it's Control U. I assume they've done the same thing with LibreOffice, but I'm not positive. But you can see I've left it. I put in all these formulas when I was doing the data entry. And I just go and select a cell and hit F2, and it helps me to go through and double check my formulas. See? I no longer need these formulas here anymore. I used those to double check my accuracy during data entry. So now I'm going to use Control A, select everything, Control C, copy, Control Shift V, no, Control C, Control Shift Alt V, there we go. No, let's see, Control A, Control C, I'll just go up here, edit, paste special. Huh, it's not letting me do it. Okay, so instead of Control A, I'll just do it like this. There. Control C, copy, Control Alt Shift V. No. Paste. Edit, paste special, unformatted text. There we go. What? What's this? Separated by tab? No. What the heck? All right, here's what we'll do. Forget about the text. We'll just only get the numbers. So we'll start here. We'll go down to here. Control C. Paste special. Paste unformatted text. Oh, gosh, dang it. Separated by, no, nothing. Fixed width. No. Yeah, separated by tab. Okay, let's try it like that. Okay, I think I got it. Yep, there. See, now there's no more formulas. Now they're just numbers. And it got my formatting there for the dollars still. Oh, looks, yeah, it's just some of these are... These ones are not good. We want those to be centered. I wonder if we do all of them centered, if it'll work. Yeah, there we go. Let's do that. Let's do all of them centered. Because the number formatting overrides the centering, and it keeps the actual ones that are numbered. Oh, left. Oh yeah. Okay, so not center but left. Right. There we go. There we go. That's good. Fixed my zeros and I got rid of my formulas. Took me a little more effort than I expected. But now I can begin simplifying now that I've got the formulas out of there. Sometimes if you bounce back and forth between Excel and LibreOffice, you have to relearn things a little bit in the process. Okay, now I'm going to remove line items that I don't need. The totals are all going to stay the same. Removing the line items is not going to affect the totals. Franchise fee, royalty fee, advertising fee, product sales, other income. So other income we don't necessarily need to see. That's a small amount, but we'll just leave it in there anyways because it's just one line item. Shared employee cost appears to be salaries. So we'll just call all of the salaries. We're going to lump all of the salaries together. So we'll take this plus that. And put this one here. And then this one, Control C. And then I'll use paste special. So I just replaced the formula. Okay, good. So now I've just eliminated these two line items. I've consolidated all the salaries into one row. Advertising expenses we want, professional fees we want, computers and software. I don't think we particularly concerned about bad debt right now. Training, occupancy, travel. Other. It's up to 500,000. Well, I'm not really removing much. Let's see about maybe down in the assets. Cash, that's important. Receivables, inventory, prepaid expenses we'll get rid of. Other receivables. Due from related party and this note payable, those are really small. Or that note receivable. So we'll get rid of those. Get rid of this deposit. Deferred tax asset. Note receivable. Those are not a big deal. The right of use assets, that looks like, what the heck? Why do they have like a 1.8, $1.9 million asset or a $1.5 million asset there of right of use? It's actually, that's all their leases that they've already signed up with. And so they're tracking that in their assets, but then they're also tracking it in their liabilities right here, lease liability. There it is, that lease liability. Right of use asset 1.5. Oh no, it's down here. There it is, lease liability right there. See? So they are giving themselves credit for an extra, looks like $300,000 worth of equity. Actually, I want to keep that. I want to keep that. Accounts payable is increased. Payroll tax is nominal. Income tax is nominal. Gift card payable is very important. That's a big one right there. Line of credit, I want to see that one. Deferred revenue is important. Lease liability current, we'll get rid of that. No, payable current. Due to related party. Okay, that's my first simplification. Now I'm going to move or copy. This will be simpler too, that's good. Yeah. I'm going to remove even more. Delete row, delete row. Delete row, delete rows. Professional fees we need. Computers and software, delete. Training we want. Occupancy. And their occupancy in 2025 is almost 1 million. Look at that increase. That could be the result of them operating more corporate stores. So when we see this increase between 2023 and 2024 for their occupancy, that's the cost of their lease or their rent. When we see that big increase, we say, well, why did that happen? And then other operating expenses have continually increased. I'm going to pull that one out as well. Oops, put back in the, put back in the border. Other income, sale of business interest, interest expense. We'll delete that one too. Net income before taxes, get rid of all that. Actually, let's get rid of these ones. Cash, accounts receivable, inventory, that's all good. Oops. Let's double, there we go. Property and equipment. Again, in 2024, look at that increase. See? So they might have picked up some more corporate stores between probably during 2024. Or they just moved into a fancy office building. That's possible too. Deferred tax, note receivable, right of use. Okay. Get rid of all those. Get rid of all that. Accounts payable, gift card payable. That line of credit is kind of small, so we'll pull that out. Deferred revenue is huge. Note payable current and due to related party, those are small. Okay, now long-term liabilities. Note payable, that's pretty minimal. That note payable is interesting though because it shows that they got a loan in 2023. Probably to purchase a new store, but it could have been just to fund operations. I'll leave it in. Okay, so now I have my vastly simplified financial breakdown. It's a lot less information. It could almost fit on one page. That's a lot more information. This is a lot less. So it's going to be easier to understand the story of what happened when I'm reviewing this financial statement. So before I print it, I'm going to go Format, Page. I would actually like to create a new page style because I've already done, if any formatting I do, it might affect, I think it'll affect all the pages because this is the default page style. So instead what I'll do is I'll go to Styles over here. If you don't know where Styles is, it should be off to the right, or you can go and find Styles up here and manage Styles. I've got F11 keyboard shortcut, so I can just press F11 and it pulls out the styles. F11 toggles the visibility of the styles. So here we have the default style for cells. Now I want page style. Default, report, new style from selection. This will be simpler. Simpler style. There we go. So now I'm using the simpler style, page style for this particular page, whereas for the other pages, we'll be using the default. Okay, and so now I want to modify this page style. Now I'm only modifying simpler 2. I'm not modifying the other pages. Footer. I don't know that I need those page numbers, but I guess I'll leave them in there anyway. Ban. Franchising 2018 to 2025. Audited financials. Simpler 2. What about the zoom? Let's set it back to 100 for starters. Okay. Control P. What do we got? Oh, it's I can do Control Shift O for print preview. Still cut off down there. Oh, I know why. I know why. I know the problem. Page style, modify, footer, auto fit. There we go. That's better. There. That's better. We got space for a header. So I'll put in the header. On, header on. auto fit height, spacing, 10. Okay, edit. I want more space up at the top. I can just do the spacing. I think that's good enough. Okay. So now I'll go ahead and print this. This is going to make it a lot easier for me to go through and see what's really happening, because all of the irrelevant details and even some of the relevant details have been hidden. And so now I'm only going to see the big numbers, the totals, and the big line items. Oh yeah, this is much better. This is great. Now I can start to do my analysis. This really sets me up. Good. The next step here is to fill in the details of what actually happened each year. So eventually I'll want to put those down at the bottom, but I think what I'll do is I'll just create a new sheet, which I will call activities. Okay. What do I want to show here? Revenues, franchise fee. The big thing we want to know is how many stores were opened. Okay. So So let's put in here stores added. Well, let's do it this way. There we go. Okay, so I've already started writing this down somewhere in my notes here. And then we also want to know total stores at year end. We could also say total stores at the beginning of year, but that's also the same as just stores at year end. Total stores at year end. Just copying the formatting there. what I'll do here also is I'll add in an extra column for 2017. And at the end of 2017, there were 35 stores. There we go. At the end of 2018, there were 41 stores. No, I'm missing something here. Let's see. 2017, 35. 2018, 41. 39. Oh, we got 36, 41, 56, 91. I'm missing the numbers for 2024 and 2025. Those figures are included in the notes to the financial statements, and the accountant notes. Look it up. Fair use, leases, trademarks, taxes. Here we go. Franchise information. $2024 open at end of year 157, 157, and then at the end of 2025 224. Now I'm not sure about these actual numbers, the accuracy of these numbers. I have a little bit of doubt about this 224 number. I've gone on the internet and tried to verify how many stores they actually have open, and the closest I've come up with is 161 store locations open as of today, as of June 2026. Now, BAM Franchising actually announced that in January of 2026, they said that they had 300 stores open. But that's, I think, very disputable. I think they might have had 300 franchisees signed up, but they definitely did not have that many stores open as of January 2026, according to my understanding. So the number of stores added during the year, we can just use a formula for that. We'll say equals this minus that. Let's see if that matches up to my notes. 15, 35, yeah, 5, minus 3, minus 2, plus 6. Okay, yeah. This is the main big thing that we're focused on. This is really the story right here. There it is, deferred revenue. This deferred revenue represents the unopened stores, what they've received deposits for, but they haven't opened yet. There's one because it costed $25,000 back then. Just copy this formatting here. So there's one right there. This looks like 6. They increased their franchise fees at some point from $25,000 to $35,000 to $40,000. But I would have to check and see when that happened. Okay, if we assume that in 2022 that they were charging $35,000 per franchise, then that would give us 18 unopened stores at that point. Then they eventually went to $40,000. I don't remember if that was in 2023 or 2024. But let's see what happens if we do this one divided by 35,000. And what if we do it divided by 40,000? So it'd be either 40 or 35. So let's say 37 stores. Maybe 36. I'll do this one divided by 40,000. 59, we'll say 58. There might have still been some that were 35,000, or it might be 57, I don't know, or 54. So I'm going to try to verify these numbers. At this point, they were definitely charging 40,000 for the franchise fees. So we're going to say 67 at that point, unopened stores. So these are not the exact number, but these are going to be close. This is going to be the exact number. This I'm pretty sure is exactly correct. This one I believe is probably dang close. It could be 19 stores though. It could be that some of them paid 25,000, some of them paid 35,000, but these are ballpark estimates. They're going to be very close, and I'm going to try to pin those numbers down even better as I go. I have my doubts about this 224 figure. I even have my doubts about 157. I definitely have my doubts about 300 as of January 2026. And the deferred revenue is exactly, that's the deferred revenue, that's the deposits that these people have paid who have not yet opened their franchises. This is really critical. What else do we see here? Oh, franchise fee collected. So stores added, that's the franchise fees collected. So I'm going to put that up here. Nice. And so then we have here franchise fee. So the franchise fee correlates to stores added. Uh-oh. These are in the wrong column. There we go. Probably did the same thing with the... No, that's good. Okay. Sure. Deferred revenue. Yeah, looks good. Got rid of those dollar signs because they were just kind of annoying at this point. Now we're really looking at their actual business model. Now, total stores at year end, that's going to correlate to the royalties. So they get the royalty fees from whatever stores are open at year end. They get the franchise fees from the stores that are added. And the deferred revenue is from the stores that are not open yet. Let's take these, do Control X, and we'll paste them right there. Oh, no. Cut, paste. Okay, good. And in fact, yeah, now we can see. This tells us how the store actually operates, how the company actually operates. This is the real story of what has happened during the last what is that, 8 years? What are some other big components here? We got the royalty fee, franchise fee. What about product sales? So this is going to be, I'm pretty sure, this is the stores that they themselves own. Corporate owned stores. Okay, this information, I'm going to have to dig around for it. So I have not compiled this information in my notes yet. Oh, here's one. So this is also in the accountant's notes in the audited financials. It says that company-owned franchises at year-end 2025 is only 4. That doesn't really stack up with these numbers I'm looking at. It might. Let's see, they say they own 4 at this point. And it says they owned 3 as of year-end 2024. So then I'll go in and find 2022 and 2023, but we need the notes. Accountant's notes, here we go. 2023. Deferred revenue, notes payable, franchise information, corporate owned franchises. The accountant notes say 2 and 2, and yet I believe that this number right here is supposed to be 3. So I'll put a question mark here. I might be wrong on that though. I'm gonna follow what they've got, and then I'll go back and make corrections later. I'll assume that the accountant is correct for now. And then I gotta go and find the 2021 accountant notes, which I have right here on the ground. And then here it says company-owned franchises 5. All right, and then 2018, 2019. Says 2 and 2. These numbers seem to match up. It seems to make sense that if they have that many stores open, that's how much product sales they would have. But right here, these ones don't match up. 2020 and 2021. 2020 especially. So maybe they were accounting for product sales in a different place, and then they started straightening out their accounting somewhere around 2021 or something. I don't know, but these numbers don't exactly match up. Okay, what's next? Growing salaries, that makes sense. Salaries shrunk dramatically in 2020 and then increased from then on during the growth. Professional fees, which I assume is attorney fees, but could also be other fees, that's increased significantly. Oh, training. There we go. There's a big one. And originally it was a little one. I did not even include this as a line item originally. So training would be for the unopened stores. Right here. No, it'd be the stores that opened during the year. There we go. Here. So remember that they have to train all these people. I'm going to make all these negative. F2 home minus. F2 home minus. Enter. F2 home minus enter. Up over F2 home minus enter. There we go. Okay, what else do we have? This occupancy, I think, relates to how many corporate stores are being operated. So I'll put that here. Again, 2020 is a year where everything was a little low, it seems like. Or most things were a little low. Most of their expenses seem to have been a little low. Yeah, see operating expenses, look. Salaries are low. Ooh, professional fees increased though. Professional fees are high that year. Occupancy is low. Travel is normal. So I guess occupancy is low and salaries are low. Let's highlight those. Let's get net income in there. Let's get professional fees also. Actually, there's a much easier way to do this than the F2 home minus. I go like this. Equals negative that. I think we can even do plus minus. Equals negative that. Yeah. This is so much easier. Look, then we do this. Control C, Control Alt Shift V, kaboom. Control Alt Shift V is a shortcut that I set up for paste unformatted. But usually it's going to be Control Shift V or Control Alt V or something like that for the paste special. So I turned all of those negative because they're an expense. The royalty fee is income. Okay, then we'll just, here we'll put total expenses. You know what I could do? I could use a cell style. Might make this a little bit easier than having to keep going and changing it to 12 point. I don't know, I'll think about that. It takes a little bit of effort to set up the styles, but then once you get them set up, things go faster. They brought in an outside investor and they brought in cash in 2022, 2023, and 2024 from an outside investor, it appears. Ooh, inventory. Corporate orange stores. Okay, enough is enough. I'm gonna do the cell styles now. New style from selection. I'll give it a name that starts with A, so it'll show up at the very top of the list. And this is just going to be 12 point. Okay, so now if I apply this, yeah, that's going to be easier. Look, just select those and then double click there. It means that, oh, no. New style from selection A, words, 12 point. Okay, then there. So it did take a second to set that up, but now that it's set up, it'll be fast for me to just apply the 12 point size. Yeah, we got occupancy already. What about travel? It has been increasing. Should I put it here? Now watch how fast I can do this. Watch this. Oh, these are in the wrong spot. Hang on. Okay, now watch how fast I can do this. Watch. Oh, but it didn't get rid of the borders. Yeah, none. Okay. So maybe I need to do Control M. Yeah, there we go. Control M eliminates direct formatting. Good. We want this to be negative. Control X, Control Shift Alt V. By doing paste values instead of just paste. If we just paste it, it'll copy the formula. We want to get rid of the formula and just paste the values by doing paste special. Right here, I'm going to put the value that corresponds to this franchise fee. It's a unearned income or deferred income. It's going to be a liability. Here it is, deferred revenue. Right here. Control M. There it is. Now it's at 12 point. Not sure what happened. See, now that I put franchise fee and deferred revenue next to each other, look at that. You can really see them matching up a little bit. think I'll make this like a different font color. Make it like dark blue. I don't know, maybe like that. Nah. That doesn't look good. Control M. Remove direct formatting. Anyway, those two numbers really go together, and you can really see how they correlate. So it's useful to have those next to each other. We can see how they affect each other. That's what I'm doing right now, is I'm pulling the numbers out and categorizing them. Not necessarily by income and expense and assets and liabilities, but by all of the above as they apply to these different story elements. These are the story elements. Stores added during the year, unopened stores at year end, total stores at year end, company owned stores. We would also like to have a separate number here for non-companies, non-corporate stores. Non-corporate stores. These are franchisee-owned stores. So this would just be total stores minus corporate-owned stores. And theoretically, this number should be accurate, but based on my personal experience, they might not be. These numbers might not be accurate. These numbers might not be accurate. That's my personal experience working with small companies, and also my personal observations with regard to bricks and minifigs and the McNeffs. These numbers seem easy to track, but they're also easy to fudge. And sometimes it's just convenient to be sloppy. So maybe they just throw these figures together really quickly, because if they double check the figures, then they might come up with a less flattering number. So they might just try to do it a little bit sloppy. If you're trying to get away with stuff, sloppiness is helpful. If you're trying to do things just really by the book and really be careful and conscientious and hardworking, then sloppiness is just not acceptable. They've got cash and receivables here. Pretty significant. Nice. This is actually really good. This one's income. This one's liability. Asset. Asset. Expense. expense. There we go. Deferred revenue is a oh, there's deferred revenue. I've already got deferred revenue down here. Yeah, it definitely belongs here. In fact, let's put these down there too. There we go. What else? Property and equipment is growing, but it's not a real major line item. I do want to include intangible assets because it's very significant. I'll just even put it down here. I'm not sure where I'll categorize it yet. Total assets, net income, put total assets up there as well. Total current assets, receivables and cash, yeah. The gift card payable is significant also. This one here. Deferred revenue, note payable. I mean, that's interesting, but it's not big. The lease liability, it's big, but it's not that interesting. Bring in total liabilities. I guess next is equity. Okay, now we get to a really fun part, which is where we say, well, the equity is offset by the deferred revenue. So we're going to bring this down here. And so here we have equity plus deferred revenue. Which is that plus that. Oh, I see. Well, let's fix them afterwards. Let's see. There. This equity plus deferred revenue, this is going to be their effective net worth. It's a ballpark figure. Or if equity net worth, those mean the same thing. So then we can calculate the debt to worth. And the effective debt to worth. So debt to worth is, we say, equals total liabilities divided by total equity. And then for effective debt to worth, we say total liabilities divided by effective net worth. That. So it looks good. See that number, that 3 right there? It's like a 1 and then it's a 3. So we want that number to be less, either 10 or less. So 3 is a good number. So now negative 10 is a horrible number there, and a negative net worth is a terrible thing, but it's offset by this deferred revenue. And as far as cash goes, they show cash of 1 million, 1.1 million. So that does seem to corroborate an acceptable, I'd say even a little bit on the low side, or if anything, mid to low range for debt to worth. So they do not appear to be financially extremely leveraged with lots of loans right now. However, they are leveraged in the sense that they basically have a loan from right here, these franchise fees. And where it's carried is this, where we see how much it is it's like 2.6 million. So it's kind of like that's money that's been loaned to them. So while we want to add that back into the net worth, we also want to consider that a liability. So actually for the effective debt to worth, we want to add in another factor. We're going to make it so that the total liabilities in the numerator is going to be, it's going to include F35, and then it's also going to include the deferred liability, the deferred revenue, this one, like that. And for this one, it won't work. Or this one. No, something's wrong here. F3. No. Yeah, liabilities. There we go. Did something wrong. That's better. So even still, even if we consider that also that amount to be a loan, they still look good for their effective debt to worth. $sign. Yeah. I've got it all messed up. I'll just try again. So this equals open parentheses total liabilities plus deferred revenue over net worth. Not F3, F33. F35. Okay. So this will be effective debt to worth 1. And this one will be effective debt to worth 2. Those numbers look fine. Either way we look at them. That ratio, this is called the debt to worth ratio. So we're going to say that their effective debt to worth ratio as of 2025 is somewhere around 4.5 to 1, 4.5 to 1, and we want it to be less than 10 to 1. Ideally, if it's at 12 to 1, we might still want to do business with them. We might still want to give them a loan, depending on all the rest of the financial condition. They might have a debt to worth of 2 to 1, but we do not want to lend to them because of the whole picture. But this is one of the metrics that helps us to get started with our analysis. Treasury stock, that's interesting. They put that up here. There it is, treasury stock. So that's really my big breakdown there. Get rid of all this now. Let's see what it looks like with the print preview. Control Shift O. A little large, a little bit on the large side. We will go into page setup for activities. Let's create a new page style. Oh, this one is the simpler style. This is based on simpler 2. Put this one over here. But then we want to do, we'll make it default. We'll do new style from selection, and this is going to be activities. Page style. And let's modify activities page style. And also let's see if it's, we want it to be landscape. Landscape, good. Okay. So, or we could do it actually maybe portrait. Look, this one we actually want it to be portrait. Actually, come to think of it, and now let's see what it looks like if we try to print it. Oh, it's all fitting. Is it? Oh, it's all fitting on one page. Oh, nice. Let's center it. There's a way to center it too. It'll look nicer. It's good fit to one page, but not seeing how to do it here in LibreOffice. So I'm going to use my old friend, the internet. I've decided I don't want to use Google anymore. So what's a search engine which doesn't use AI? DuckDuckGo. Okay, good. That's what I want. No AI. Yeah, duckduckgo.com. All right, so what I'm going to do, I'm going to go to settings. And where's the search engine? Search engine. Change. There, DuckDuckGo. Set as default. Nice. Yeah, good. That's good. That's going to be really good. So now if I just search for something, it'll take me to DuckDuckGo, which does not use AI. We've turned off AI assisted answers, AI generated images, AI feature suggestions. Good. Let's see what happens if I do it up here in the search bar, if it does it with no AI. I'm going to say, I'm looking for, oh yeah, how to center printing on, this is called Libre Calc. No, no, boo, boo, never, no, no AI. And it's going to take some work, but I'll get it. I'll get it. Here we go. Format page. Tab, page, table alignment. Oh, there it is. Nice. Cool. That was it right there. See, that's what it is. Now it'll look nicer. See how it's centered there? I'll adjust the header and footer. Nice. Oh, it's missing those comments about, it's missing the 2026 column. I think it's got a print area set. See, it's missing that column on the end. There, now it's got that other column there. And that'll give me some space for writing notes in the margins. Print it up. Now, this page that's just printing right now is going to be my new page for taking notes. The next phase of analysis is that I will go through and take this information that I've kind of simplified and summarized and brought all into one spot, and I'll study it for a while. It's a little bit small. It got shrunk to fit on the page, so I might figure out a different way to format it, make the numbers bigger and print it again, but this will get me started. I think that's about good for today, or at least for right now. I might do more later, but for right now, I think that's pretty good for this next phase of financial analysis. As you can see, I've simplified the information and I've brought what I consider to be very relevant information and consolidated it, so then I can go through and look at it and think about it more and try to figure out which numbers relate to which and how. Very good. That's all for now. I'm going to, oh wait, except for these are too small. Oh, no. There we go. Control S to save. And then remember as you go, for version control, anytime where you're like, don't want to accidentally mess up what you've done so far, then you just create a new tab, move or copy it, and then you just keep going on that new one. That way you don't have to worry about accidentally deleting a bunch of stuff you didn't want to delete. What I will later do after I've confirmed that everything is as it should be, I will later go back and delete some of these extra tabs. Like Simpler 1, for example. I didn't really take very much out of that that big financial breakdown. I didn't take out very many line items. Simpler 2, I had taken out a lot more line items. So I probably won't want to keep Simpler 1 in the long run. But I did both of those only to get it even more simplified and to correlate the financial figures with these numbers of stores. Number of stores opened that year, number of stores that still remain unopened. How many stores are owned by the corporate entity? How many stores are owned by related parties? Also. And how do these financial figures relate to all of that? I'll make a couple of points here before I wrap up. Gift card payable. Whenever you buy a gift card, you're giving the company cash, but they're not giving you anything in return. So you're basically loaning the company money. So Bricks and Minifigs, as of year-end 2025, had essentially a $1 million loan from the customers. And then when the customers go in and use those gift cards, then they spend that money to buy Lego product. And then the corporate entity has to send money to that franchisee, or they might, instead of sending them money, they just might give them a credit in the computer system. But one way or the other, they have to send that money to the franchisee whenever the gift cards get spent. So the corporate entity, if, for example, if everybody in the world who has a Bricks and Minifigs gift card were to go into their local franchisee location and spend that gift card money, you would think that that would be really helpful to the corporate entity, but that would actually deplete the corporate entity's cash. And the actual total amount of cash that the corporate entity has is right here. It's 1.1 million, and the gift card payable is 1 million. So if everybody were to use their gift cards right now, the effect, it would not be immediate, but the effect within a month or two would be a depletion of this cash reserve. Not a total depletion, but either it would come from the cash, or it would come from the accounts receivable, or it would go into accounts payable or something. But it would mean that they have to use cash that they've taken from people and use it for something else. Same thing applies with the deferred revenue. So they've received all this cash. They've received $2.6 million in cash from franchisees who have not yet opened their stores as of the end of 2025. So even though they have 1 million in cash, they've received more than that amount from the new franchisees. Also, if we just look at their operations, they're not currently making money. There's their net income here. They've been losing money every year since 2021 on operations. They lost 450,000 in 2022, 100,000 223, 100,000 in 2023, 200,000 in 2024, and they lost 67,000 in 2025. So if they've just been losing that much money, how much is that they just, let's just actually add all that up. And that all adds up to negative 777,000. That's how much money they've earned in income in the last 8 years. Total from their business operations. Well, if they're losing all that money, then why do they have $1 million cash, and why are they still in operation and everything? Well, their cash flow is pretty good actually, because they've been getting all this cash from all these new franchisees. I would say, as just a general summary from the analysis that I've done so far, there's still a lot more to be done, but I've kind of got the first tranche of analysis finished right here. I would say that this company, it's primarily the way that it's financing itself right now is by getting new franchisees to sign up. They're paying for their losses with growth, with more sales. This can go two ways, and there's no way for me to predict right now with the information I have to say which way this would go. Especially if we were to imagine that they were not in the middle of a massive corruption scandal. That corruption scandal changes everything. But if we were to imagine before Reckless Ben made his video, before we all knew about the Lego theft, and just try to analyze what was their financial situation regardless of all that. They are a little bit top heavy because they're making all these commitments to all these people that they have not delivered on yet. It's a little bit like a Kickstarter where they're promising everybody, yeah, we're going to give this product, it's going to be awesome, but then they still haven't delivered on it yet. Well, they've been delivering on it. They've been opening stores. They've continued opening stores. But I don't believe that they've opened 300 stores. I don't believe that that's true. And my big question right now is, what are these new franchisees that have not opened their stores yet, that are in the process of getting ready for grand opening? What are these guys thinking when they see all of this dishonesty from the McNeffs? Will all of these stores get opened, these ones that they've received the franchise fee for? Additionally, when I go through the financial disclosure document and I look at the fine print of the franchise agreement, and I get in there and I dig in and I look for the different, I've just gone through and kind of underlined and studied everything. Let's see, this one is the area developer. Yeah. So here, now we're into the franchise agreement here. And they have a provision about that once you sign, you have 180 days to open your store. These are all the addendums, guarantors. Here we go. Here it is. find it for you. Development and opening of the store, page 4, page 11, section 4. Here we go. So, site selection, acquisition of lease, development of store, furnishings, fixtures, and signs, store opening. Here it is. E. You must open the store and be operational within 180 days of signing this franchise agreement, the opening deadline. Any variance or extension of the opening deadline must be obtained from us in writing. That right there. Any variance or extension of the opening deadline must be obtained from us in writing, and you must open the store and be operational within 180 days of signing this franchise agreement. Then you have to submit all this, and you have to do this, and you have to pay expenses for marketing materials and advertising. Your grand opening plan must be implemented 30 days before your store's targeted grand opening date. I saw in one of these, maybe it was a different one because I've got the different years, where it said that if you don't open within 180 days, then the whole contract is invalidated. It's franchise agreement. Let's see if I can tell you. Section 4. No. Store. No, I don't have it here in these notes. Not sure where I thought I saw that. Oh no! What happened? No! What happened? Is it still going? No, it's still going. Okay. Whew. I almost accidentally turned off the computer. We will provide you with access to our pre-opening manual to assist you in the pre-opening process. You will prepare and furnish to the company an opening, advertising, and promotional plan and budget for the store that will contain a timeline for opening and budget for publicity, advertising, promotion, staffing, decoration, including the budget, decoration and operation during the opening period. Grand opening plan. You must submit a grand opening plan, including the budget, to us for approval at least 90 days before your store's targeted grand opening date. You must spend not less than $5,000 for advertising and promotion of the opening of the store. The grand opening expenses will be for materials and marketing services expenses such as media costs and will not include staffing costs. You must submit proof of then current advertising and marketing expenditures to us 10 days before the opening of your store. Your grand opening plan must be implemented 30 days before your store's targeted grand opening date. And for 30 days following the commencement of the store's grand opening event, we will also provide you with opening operational assistance as set forth below. To assist you in starting operations, including on-site opening assistance as scheduled by us, you may be required to pay for the expenses of personnel, including airline and other transportation costs, meals, lodging, and salaries. Initial training, pre-opening training, additional training, hiring, training. This is where it talks about the operations manual, and they try to keep that private. So even though the FDD documents have been leaked online. I don't know of the operations manual, of anyone having the operations manual or the pre-opening manual online. This is where it says we have the right to modify the manuals in the future. Manuals contain confidential information. Okay, well, I'm not seeing the verbiage I thought I remembered, to where I thought I had read somewhere that it said that if you don't open your store within that 180 days, that basically you're in default of the contract, but I'm not seeing that verbiage. However, this verbiage here does say that they must open the store and be operational within 180 days, and any exceptions have to be obtained in writing. So that's a question I have, is if these guys seem to be pretty shady, Ammon and his brother Matt. So are they now going, and since they're not able to deliver on all this training and preparation and everything to all the new franchisees, then are they, after 180 days, going to the franchisee and saying, nope, sorry, you were supposed to open within 180 days, you didn't do it, so now we just keep your deposit and you are in breach of contract? I hope they're not doing that. I've not heard any evidence to suggest that they are doing that, nor that they're not doing that, but I mean, it's a lot of money. 2.7 million. Oh wait, no, it's right here. Yeah, still it's 2.7 million deferred revenue. That's a lot of money. Those are the key initial takeaways thus far in the analysis. My name is Eagle Dog. My name is Matthew. And this may seem like a slow, tedious process, but for me, this is just a lot of fun. And I would like to just keep going right now, but I'm not sure what my next step is. I kind of need to take some time to be by myself, study the numbers, evaluate, and keep familiarizing myself more and more with the information. I'll be going in and trying to double check these numbers for the unopened stores, for also the numbers of the total stores, the corporate owned stores, the non-corporate stores. There is additional information in the FDD, franchise disclosure document, about the number of stores in operation. Some of that information does not seem to all correlate perfectly. It seems to be not totally super ultra carefully prepared, but I could be wrong. But that's really what's driving all of this, is these new stores added, and now they're doing them at $40,000 a pop. So if you go back and read the financial disclosure document for 2018, 2019, then they were charging $25,000 for a new franchise. But now I'll show you where it is. There it is. Oh no, see this, yeah, this is the 2022 one. Okay, so this is the 2022 document. And there's the initial franchise fee. Okay, but then $2,024. Here it is, $2,026. Oh yeah, I guess this is I thought this is 2025. I think it's actually the 2026 FDD document, which includes the 2025 financials. So if we go up, this might be the one where I saw about the 180 days. Let's see. Site selection, position, development, store, furnishing equipment, size, store opening. No, that's the same as the other one I read. So again, I'm not seeing that other verbiage I thought I had read before. I'll be keeping my eye out for that. I might have just imagined it. There it is. Okay, so the mandatory training fee is only if you do a transfer. So this part does not apply to the new franchisees. This only applies to transfer fee. So if you do a transfer, then you have to do training fee of $10,000, but the initial franchise fee of $40,000 includes that initial training. So now they're charging $40,000 each, and that's still just for franchises in general. That is not expensive. Franchise fee for somebody starting a new franchise could be $100,000. It could be $75,000. It could be $20,000. In this case, it's $40,000. That dollar amount itself alone is not a problem. That's in line with industry standard. Have the people who have been signing up, have they been pressured? Have they been bullied? Have they been threatened in order to get them to sign the document and join the team? I don't know that. There are also people's names who go along with some of these different activities. So, for example, I'll go back to this financial disclosure document. There's a section about business experience. It's way up at the top. Right at the very beginning, you got like page 1, 2, 3, 4. Page 4, what you need to know about franchising generally. And then page 5, special risks to consider about this franchise. Financial condition. The franchisor's financial condition, as reflected in its financial statements, calls into question the franchisor's financial ability to provide services and support to you, with you meaning the new franchisees. There it is, right close here. Business experience. Okay, so Ammon McNeff, Matt McNeff, Reed Brimhall. Here we go. Development, Chief Development Officer, Darren Hicks. So that's going to be either their main sales guy or one of their main sales guys. And there's another Brimhall, Reed Brimhall. I'm not seeing it here, so maybe the other Brimhall is left, but I'm pretty sure I saw it in one of their other financial disclosure documents. I'm pretty sure I saw that there's another Brimhall family member involved in the operation. Adam Brimhall, see? New unit onboarding manager. So what happened to Adam Brimhall? He was the main sales guy. Oh no, he was not the main sales guy. He was the main training guy. He was the guy who was helping all the new people who had just signed on to get their store set up. Is it possible that he was under an incredible amount of stress as the new unit onboarding manager? So what happened to Adam Brimhall? I do not know the answer to that question. But Reed Brimhall I think is probably maybe his father or brother or uncle, but probably related. Reed Brimhall appears to still be the CFO. But we see Adam Brimhall included in the leadership in the 2024 FDD. But then when we go into the 2026 FDD, see Reed is still there. But what's happened to... See, we got Ammon, we got Matthew, we got Reed, we got Darren, we got Mike Wu, but there's the other Brimhall is missing. Adam Brimhall is missing. He might still be there. He might have just not been included on the write-up this time. Or he might have gone to do other things. Much appreciation to Justin B. Watson, who provided this incredibly detailed, helpful deep dive into FDDs, UCC filings, legal entities, and lawsuits. This is where I found the 2026 FDD, and I'd already obtained the 2024 and the 2022. I'd already obtained some earlier ones, but now there's all these other documents, legal entities, UCC filings, different links, not all necessarily documents, but links to information about an interesting lawsuit where Ammon McNeff was involved in a lawsuit with his father, Daniel. And then all kinds of helpful links in here. Much thanks to Justin B. Watson. That was very helpful. Okay, I'm going to wrap up now. And I may or may not do another live stream from the computer. But I'm getting pretty close on this analysis to where I will be able to present it in a properly edited video. Hopefully within the next 2 or 3 days. All right, thanks everyone. Goodbye. Oh wait, look, there's chat. Queso Blanco Churro Company, awesome. And Wisdom WV3. Hey guys, thank you. I'm not even signed in to be able to chat. All right. See, I'm still figuring out this chat, you guys. I'm not. Oh my gosh. Back. Escape. Oh man. Yeah. Okay. I will learn how to do the chat later, but thank you for those. That's the first time I've ever in my life received chat comments. Well, except for one time on Twitch when I was playing chess. I did receive a chat comment one time playing chess on Twitch. So this is the first time I've received chat comments on YouTube. So anyway, that's cool. You guys are checking it out. If you're highly technical, you might have stuck around for a while, or you might just look at it and poke around and see what we got. That's cool too. All right, see ya. Bye, guys.